We are going to discuss about the accounting equation, which is the chapter number 5 of class 11th, accountancy. So let us begin. Before moving ahead with the meaning of the accounting equation, let's check first the formula or the equation actually we are talking about. So it is based on the dual aspect principle, duality principle, which says that is both the sides will be equated. So here the one side we have that is of asset side, which is presenting the total asset of the business or the firm. The another side is of the total liabilities, which is representing what when we talk about the total liabilities in business we have the internal liabilities as well as the external liability. Which is the internal liability? The capital is only the internal liability for the business. And when we talk about only the term liability here, the only term liability is representing the external liability of the business. So here only we'll present one side the total asset, and on the other side we'll have the total liabilities, which is the sum total of the internal liabilities as well as the external liabilities. So now after seeing the formula or the equation, let's see how we are going to present this meaning or the definition of the accounting equation. From this equation itself we have derived the accounting equation means that the asset of the business, the one side the asset we are talking about, are always equal to the other side, that is what the total liability, that is representing the total capital, as well as the liabilities which is representing the external liability. So to see the same implication, we'll see one example for that. So the example says that Ram started business with the cash of 10,000. So when Ram is starting the business, we have to think of the two side. That is what, whether it is increasing the asset or it is increasing the liability. So as Ram is only the owner will only start the business. So 10,000 he has invested. Any amount which is invested by the owner is termed as the capital for the business, which is only the internal liability. So as Ram is starting business with the cash of 10,000, so it has to be presented in accounting equation. What is the proper format? So here that equation only will present. Then the one side will present the serial number. Then this another side will have the asset, which will be equal to the other side, that will be the liabilities plus capital. So here we'll write the total asset, and the other side will be presenting the total liabilities, which is the sum of the capital and the external liability. So as Ram is starting business, that only will present, as it will increase the cash of the business, and cash is the part of the asset. So in this manner we'll increase the cash. So for first transaction we'll be presenting the first point, that is what amount 10,000 the cash is increasing in the business. So that is only represented the cash we have increased by rupees 10,000. Along with that, on the other side we have the capital side. So with that, as 10,000 is only the owner's fund which is invested, so that 10,000 will increase the capital. So under the capital also again the capital will be recorded. So this blank space is there only, this all blank space is there only to write what all asset and liabilities are being generated in the business. So cash is the asset which is generated in liabilities, that is what the capital is generated. So 10,000 under the capital will be recording 10,000, that is of the owner's fund. So after this what we have to do is, after first equation we don't write the new equation, because the first equation itself is the new equation. Why I am saying this, that also we'll see after the second transaction. So here we got the second transaction, which is representing what the Ram has purchased goods with the cash of 1,000. We need to think, if the Ram is purchasing the good, so it is increasing asset or the liability. So as Ram, he has purchased, Ram is only the owner for the business. So Ram has purchased the goods for us. So goods are the asset which is generated, and that good is only the stock for the business. So under the asset side only will generate the new asset, that is what the stock. Along with that, here as we have purchased the goods on cash, so it will reduce the cash even. So let's increase the stock by rupees 1,000 first, and then let's reduce the cash by rupees 1,000. The amount which is reduced, for that we have written the amount in the bracket portion, which is representing only the amount is being deducted. So this is only the second equation implication. So after second equation, we'll try to generate the new equation. Why the new equation is required after second one? So that we can get to today's balance. Today's balance of cash, today's balance of stock. So we have got today 9,000 cash balance, as 1,000 is being deducted from that 10,000 only. So we have got the cash of 9,000 till date, and 1,000 is the stock that is being generated, which is equal to the other side, that is of 10,000 capital. So as we have derived the new equation after the second equation, what is not required for the first one? The new equation after first equation, because that first transaction itself is the new equation, because with that nothing has to be adjusted. But after second one, with the previous point, we have to adjust the things and we have to derive the new equation out of it. So after second transaction, let's record the third one. The third point says that is what the goods sold to Shyam on credit for rupees 500. Whenever we are selling the goods, that too on credit, so goods are reduced because we are selling the goods. But again, at the same time, when we are selling the goods to Shyam, who is our debtor, because he hasn't paid the amount, he has purchased on credit. So from our side, from the business, the goods are reduced. So from stock, the 500 to be reduced. But at the same time, it will create the asset for the business, and that asset is only the debtor for the business. Who all are the debtors for the business? From the person to whom the business has to receive the amount in the near future for the credit sales. So as here we can see, the goods are sold on credit. So that Shyam is only our debtor. So the new asset will be generated, that will be the debtor for the business. So let's record the same. The debtor, rupees 500, it is the new asset for the business. So in this way, the third transaction will be recorded. In the same side only we have recorded stock, and on the same side only we have recorded the amount of debtor only. So one negative, one positive will lead to the zero or the nil impact. So here we can check out that every time these all transactions are what equated. So after third one, the new equation has to be recorded. New equation, 9,000 is only the cash balance till date. Along with that, till date we have got 500 as the balance of stock, and 500 is the balance of the debtor which business will receive in the near future, which is getting equated by rupees 10,000 on the other side, that is of capital. So after this, we are done with the third transaction even, and we have got the new equation. Record the fourth transaction. So before recording the fourth transaction, we will record the previous new equation only, or if we would have continued in the same. So before that, we have got the new equation that was of 9,000 of cash and 500 of stock and debtors 500, and which was equal to the total capital of 10,000. So let's record the fourth transaction. So for that, we have paid rent 500. If the business has paid rent of 500, so what will be the implication? The cash will be reduced. So that's why from the cash, the amount is being reduced and presented in the bracket. Along with that, the rule says, or the concept says, whenever any such expense will be there, it has to be dealt with the capital. The expense, who is going to bear? Only the owner. So that expense will be deducted from the capital. And whenever any such income will be there for the business, so it will be added to the capital. So as rent is one of the expense for the business, that's why it is being deducted from the capital. And after that, we have to derive the new equation. So let's derive the new equation for the same. The new equation says that today we have got the cash of 8,500, the balance of cash, 500 the stock balance, and 500 the balance of the debtors, which is equal to the 9,500 balance of capital. Now after this new equation even, again we have to record the fifth transaction, so it has to be closed. Now received commission 400, as it is received 1, so 400 to be added with the cash, because we will receive, the mode of receiving the commission will be in cash only. So 400 is being added with the cash. Along with that, that 400 is the income for the business, so that's why again that 400 will be added with the capital. Whenever the income and expense will be there, it has to be dealt with the capital only. So that 400 was of commission, that is the income for the business. So that 400 is being added with the cash, as it will increase the cash balance of the business. Along with that, it will increase the capital, or you can say the income, to be enjoyed by the businessman only. So that's why we have the separate account for the businessman, the proprietor, that is 400. So after fifth transaction, again we'll derive the new equation, that will be 8,900, that is of cash, plus 500 of stock and 500 of debtors, which is getting equal to 9,900. So both the sides are equated. Here we can see the asset side is also of 9,900 and the liability side is also of 9,900. So in this manner we can say that yes, accounting equation is proved, both the sides are getting equated. Here we got another example of the multiple effect entries. As here goods are sold on credit, as this is one of the example of multiple effect entries, that a single entry which will be presented twice or thrice in one side only, or the other side, or the vice versa even, so that we can check out that goods are sold on credit. The cost price of the goods was 30,000. We have purchased that goods for rupees 30,000 and selling it for rupees 40,000. So as here we can see that the business is getting the profit of 10,000. And in the previous point only, I have informed you that whenever the profit and loss will be there, it has to be adjusted with the capital only. So this 10,000 will be given to the proprietor, as it is the profit, it is the part of the profit. So it has to be added with the capital only. So let us record how it has to be recorded. Let's see. As we are selling the goods on credit, goods will be reduced because of that. If we got the balance of stock before that, so with that stock only we'll reduce rupees cost value of the stock, because when we have purchased, that time we have purchased it with the cost value only. Then we are selling it on credit, so the debtors will also arise for the business. So what we have to do is we have to generate the debtors for the business even, and from debtors the business will receive 40,000, as the goods are sold for rupees 40,000. So from the business will get 40,000 from the debtors only. Along with that, as the 10,000 is the part of the capital, so this 10,000 to be added with the capital. So as we can see, both the sides are now equated. Asset is getting equal to the total liability. That is what, on one side we have got 10,000 here we can see, and on the other side even we have got the 10,000 amount. So now both the things are equated, both the sides are equated. So in this manner we'll be presenting the multiple effect as well in the same transaction. So here is one accounting complete equation taken for presenting the same. In this manner we have to present every time. On the top we'll be presenting the cash, stock, creditors, capital and all those assets and liabilities which are getting generated. And just below the same, as it is a part of stock, suppose, as it is a part of the creditor, suppose. So in this manner it has to be recorded. And after the every second equation we'll derive the new equation. After third equation also we have derived the new equation, and we can see both the sides are equated, 1,05,000, 1,05,000 on both the side. So we can say we are done with this accounting equation, both the sides are equated. So in this manner, in this chapter accounting equation, every time the business will try to record all the things in such a manner so that both the sides should be equated. That's it for this chapter accounting equation. Thank you, children.